my mentor put me onto this model, I don't know, about 6 or 7 years ago. Yeah, so yeah, I think I mean, if you got some cash sitting, real estate is, like, I always call it, the great equalizer.
Okay.
You put it into the right, investment properties, like you could cash flow. And what I was, we were talking on the text yesterday, my mentor put me onto this model, I don't know, about 6 or 7 years ago. And my at that time, my cash flow model was the standard, buy a rental property, fix it up, do all the cosmetic work, paint, carpet, whatever, to get it quote unquote rent ready. And I was going the Section 8 route. And that's the route I was going at first. And like, being in Florida and my property was in Virginia at that time, I'm still getting the leaky toilet call, even though the government per se was paying that Section 8 rent. I was still on the hook for the leaky toilet call. And that wasn't my life. It was so stressful, man. Yeah, it was just like, man, every month it seemed like I was getting a call, and I started to dread that when I saw the incoming call from the tenants. I was like, shit, there's another issue. Yeah. But at that time, my mentor was putting me on. He's like, hey man, you need to go with the slow flips, which is what we call it, slow flips. And I was like, yeah, I hear you, but I like Section 8. So fast forward a little bit, I've been doing this model for 5 years. It's called slow flips, and basically, you just buy the property or acquisition. And it's beautiful because I'm in a different state. I just love the model in the single family world. You buy the property just on the acquisition, just the purchase price. You don't do, literally, you don't do any repairs, man. It's beautiful. And what it is, I have a team specifically in the Virginia market, streamline. I have a marketing team that will fulfill, once the day I close on that property, they'll fulfill the property with what we call a tenant buyer, where they will come in and they will put a non-refundable down payment down, which is on average, I get about $3,000 down. The tenant buyer up front, non-refundable. Versus if I rented out that property, I have to fix it up, get it rent ready, and that tenant will give me a refundable deposit, and they get it back if they move out, when they move out, and they leave the property in a decent condition.
Gotcha. Okay.
So on the flip side of this slow flip model, they give me a non-refundable $3,000 on average down payment. I don't do any work, but the reason why I'm not able, I'm off the hook for doing any work, because it's marketed as owner financing. So they go in the property and they're like the owner of the property per se on paper.
Okay.
If that makes sense.
So, but how do you? So you don't own the property, is that what you're saying? On paper?
No, you or I, we'll own the property. Our name is on the deed to the property. So just say you purchase a property, right? Today in Virginia, just say for $80K.
Okay.
Here's the property for $80K. The marketing team will market it on some platforms, and what the marketing team does, and I have a presentation for you, and we can go over it more in depth in a minute, but what the marketing is, you buy a property today, 123 Main Street, $80K in Virginia. The day you close on it today, the marketing team is going to market on some platforms, owner financing, property 130.
Okay.
Right? $975 a month, $3,000 down. They have a tenant buyer. I'm your tenant buyer. I see that thing just say Facebook Marketplace. I'm interested. I got the $3K. The marketing team is not going to do a credit check for me. My credit check is that I got a valid job that I can show that I can afford the $975 a month. And they ask for, I think, like 2 or 3 months bank statements. And obviously if I got that $3,000 to put down up front.
Okay.
So I sign the documents, and what in the Virginia market is called an agreement for deed or a land contract. So the deed is still in your name, Munish, but they're working is a 30-year land contract. So they're paying you $975 for 3 years. For what did I say, $140? They market it. You pay
So 975 times 30 years, pretty much.
For 30 years with interest. Obviously, it's always interest, always interest. So whatever, just say they market it for 140, 975, $3,000 down. They put $3,000 down. Now that 140 is down to 137. So that 137, they're paying that 975 off that 137 for 30 years, and whatever interest that is to make it 30 years. Okay. You pay $80K cash for it.
Okay. So got it. So you're getting $3K from the tenant?
Tenant buyer, yes.
Okay. So you get the $3K, and then and they're signing a 30-year lease, or they're just signing a year-to-year?
Not a lease. No. They're signing a 30-year land owner financing land contract.
Owner finance. Okay, so after 30 years they'll own the property, so you don't have to ever sell.
Boom. Yes, but your name is still in the deed because it's the name of this agreement is called an agreement for deed or a land contract. It's two different names, but it's the same thing.
Okay.
And that's in the Virginia market. We can do land contracts. And the reason why we like land contracts per se, specifically because number one, the deed stays in your name. And number two, if they decide to default on that $975 a month, you can still evict their asses like a tenant, which is beautiful in the Virginia market.
And then you can get somebody else in there.
I don't have to do the foreclosure process, which takes forever. Eviction takes 2 to 3 months.
Okay, and then you can get somebody else in there.
You rinse and repeat. Boom.
So what's your exit strategy? Like when do you know, okay, it's okay that we made enough money, let's get out? Like, or there is no exit strategy, just let it run.
Well, the exit strategy is you're holding the property for cash flow. So that is your exit strategy.
So pretty much hold them for 30 years, and then you get, so let's say the property is 100K, right? And then you get 140.
You get 140 plus the interest they're paying. So that tenant buyer is it's just like if you go to a bank and get approved for a 30-year loan for $250,000. Okay. Interest, you're really paying double that for 30 years because of interest.
So after 30 years, you don't own the land, they own it, and you got your money. So you almost double your money and you're out.
You're more than doubling your money. You're probably triple, at least quadruple, because the interest rate is probably on average. The interest rate is around 10%.
Oh, really? Okay, so it's not like 2%. Okay.
Yeah, interest rate that you're charging the tenant buyer. So just say $975 a month at 140 for 30 years. Whatever that equals out, I don't have my calculator in front of me, but that's probably.
So 975 times 360, that's 350,000. Times 360, that's
whatever interest rate that is. I can pull it.
It's going to be around $420,000.
And you pay $80K for the property.
But what happens if somebody leaves, and then how do you rent it out? And so if, let's say I'm the first tenant, right? Yeah. And I'm in it, and I decide to leave. I don't want to pay rent. I'm done. I'm leaving the country. But how do you find the 30-year agreement with somebody else now?
That's a great question. So first of all, you keep that $3,000 because it's non-refundable.
Okay.
What the marketing team is going to do, they're going to rinse and repeat, Manish. They're going to put it back on the platforms. You'll get another $3,000 down, another $975 a month, and their day one starts on 30 years. It's the same.
So it only works in Virginia market. It doesn't happen in California, does it?
I never done it in California. I've done it in Georgia. I've done it in Alabama, and obviously Virginia is my.
So this is more like Mexico lifestyle. You lease a property for 100 years and all that stuff, and then you own it. Some stuff like that, right? So
well, it's not leasing, because leasing you're a landlord. I mean, they own the property.
So people that are the people that are in the property, they know they are the owners after 30 years, no matter what. And how does the paperwork work? Do you have to do the whole thing? Do you have to get a realtor involved? And how does that work?
No realtor involved. No, because it's not a closing. Even if you had a closing, you don't need a realtor, because I can just say if you bought a property for $80K today, you send that purchase contract for $80K cash to the closing table, and the closing office will run title search and all that, and you don't need it. Most of my properties I buy, I don't have a realtor, because you got to pay realtors 3 to 6%.
Yeah. So after 30 years, you don't need a realtor. You just let it be, and pretty much once you're paid, you don't need to do any paperwork. You got your money, and they own the property now.
If they go straight 30 years and they pay it $975 a month for 30 years, then it'll pay you off in 30 years. Yes, that's a long time though.
Yeah, we will. Who knows what's going to happen to us in 30 years? But
yeah.
But let's say, can you pass this on to your kids and all that stuff? They will own it because who knows what's going to be happening in 30 years.
Absolutely. And another thing too, I want to add to Monish is that I had a couple of these slow flips, is what we call it, where the tenant buyer brought me out. So in that paperwork is a non-prepaid penalty. So just say going back to that 140K, they're paying you $975. 2 years go by, and it's like, you know what? I want to just buy you out, and they can do that. So then now that they put $3,000 down, so they have 137. They pay $975 for 2 years, and just say within 2 years, their balance is because of interest 133 and 133,500.
Okay. They
paid you for 2 years for cash flow. Now they want to just go ahead and buy you out. They got some financing through Bank of America at 4%, 3%, and now their balance with you is 133,500. They can buy you out. That's very rare. But
so Antonio, what's this 140 again? So 975 per month for 30 years, right? Mm-hmm. So what's this 140 you're talking about?
140 is the example of what on paper on the land contract, how much they are buying it from you off for you for.
Oh, okay, got it.
Yeah, so you pay 80 cash for it, right?
But they owe me 140
on paper, and they're paying that $975 a month.
So if it takes 50 years, 20 years for them to pay it off, you get 20 years of rent plus 140, right?
Well, that interest they have is principal interest in that 140.
Oh, got it. Okay.
Insurance. So part of that's going to part of that 975 is going to the principal.
Got it. So in 30 years, it's going to be around, I don't think it's going to be 425. I think my numbers are wrong. It's going to be around 300 then. So 350, I think. That's what it comes down to.
Okay. Yeah.
That's 3.5 times your money. That's almost 4 times your money in 30 years.
Oh, absolutely. And yeah, it's a beautiful model. And what like I said, what's the beautiful thing about this? The worst case scenario is they default on the 975 in this example. You can get their butts out. And what a landlord would do, they would go in and like, damn, man, they messed up this house. I gotta do paint, carpet all over again. I gotta do this, put 10, 15 grand, 20, whatever grand to make it quote unquote rent ready. With this model, you're not doing anything, man. The marketing team is gonna go in, take some pictures, do some videos, remarket the property, get a new tenant buyer, get a new, not a new, but another $3,000 down, another nice, is a rinse and repeat.
So if somebody defaults, that money's gone, right? He's out.
Oh, they can't get that $3,000 back.
Or whatever they paid you. Let's say they paid you 10 grand in rent in like 3 years or whatever it is, or 30 grand. So that money's gone too. And then we redo the whole 30 years again at that point.
You got it. Okay.
So you want people to default, pretty much.
I mean, if you want to think like that, yeah. I mean, I don't be like thinking like, yeah, I hope they default, but I don't mind. I don't mind it if that.
You don't mind. Okay, so you're not stressed. Even if default, you're still like, okay, whatever.
Yeah, and you got to figure for average American, $3,000 is a lot of money.
Yeah, of course it is.
Like that's a lot of money for us. So that's some skin in the game for average American that makes what they said. Average American makes what, 50 grand a year?
Yeah.
If you put all the states together, so
yeah, especially in those areas, I think that's maybe even high. I think average Americans in that area maybe 40.
Exactly. So my Virginia market is night and day from a California market. We can buy 60, 70, 80,000 properties all day long. Here, I mean, you some people's property taxes are back.
Yeah. I agree, especially where you guys are. That's LA area. That's easy. 7-8 million dollar homes are very common.
Yeah. So when I know quite a few investors here in the California market, and when I share my numbers, I mean, I've got guys here. They'll buy like $1 million property, put $100,000 into it. Now they're in it for 1.1, whether it's their cash or bank financing or whatever, and they're getting 6 or 7 grand a month in rent. I'm like, that's a low ROI.
Oh, that's why I stopped my real. I'm not gonna lie. At one point, I had 10 properties in California, and half of them were paid off, and my return was 1 to 2%, even on paid off properties. I mean, that's just a fact, right? I mean, if you do the numbers, you buy something for 200K, you rent it out for 1,200.
Yep.
Right over here. And I bought them when the market crashed.
Yeah.
I started buying real estate. And then if you do the numbers, you're literally between 1% and 3% after paying HOA, property taxes, management fees, insurance, all that stuff. You're making $500 a month, if that.
Wow, man, that's crazy.
Yeah, on a $200,000 property, you're making $5,000 to $6,000 a year. That's 2.5% roughly.
Yeah, that's not.
Money was here. I gave up on real estate. I'm like, yeah, I got so much capital tied up.
Yeah.
The money comes in, but I can't really do much with it. I can't buy another thing. The returns are so small.
Right.
So then I looked into commercial. Luckily, I wanted a place for myself, so we're using one of the places in Livermore. And then I bought a place in Sacramento area last year, and I got a great deal because of COVID. People got scared, they wanted to take off, and I got $50,000-$60,000 cheaper than what they were asking.
Nice.
And so long story short, I've tried both sides, and I felt like it's so hard to make money in real estate unless you flip them, unless you start flipping. But what you're saying, that, man, I've never heard of this before, but that sounds great.
Yeah. It's a beautiful thing, and my mentor owns like 125 of these things. Probably, I want to say, I haven't spoke with him in a few weeks, but as of late, I think he had about 50 of them paid off free and clear, and the rest of them, because here's his model, okay? He does 5-year, like, if he's not paying cash for them, he purposely borrows money at 5 years.
Okay.
So he's okay and completely happy with having at breaking even on his borrowed money, or like coming out of pocket for $50 or $100 every month, because he wants a free and clear property quick as possible.
Okay.
If that makes sense. So that's his model. I'm a little different. I'm younger than him, so I'm okay with borrow. If I'm gonna borrow some money from a private lender, I'm okay with getting 10-year money.
Got it. So you got time. So you're like, okay, I'll just take my time. I don't need to pay it off in 5 years.
Yeah. So in his brain, he's like, okay, Antonio, I got 50 free and clear already. These other, 70 plus properties, accumulate together. I got 3 more years left if you put them all together. And like 3 more years left, I have 124 free and clear properties. And now I can go freaking chill on the beach with my margarita. And that's his thing, That's always been, because he been in the game for like 25 plus years, and he's seen a lot of cycles. And this seems to be one of the recession-proof type models, because I think a crash is coming very soon.
Yeah.
I came in the real estate game in 2009 during the Great Recession, where it was the crash. I came in started that crash.
You saw great potential, yeah.
Yeah, and I remember those. All I was doing was flipping for like 3 years. I didn't keep none, but I remember those deals I just should have kept. So
now I look back, I wish I kept my those cheaper properties. I wish I kept them, because they've already doubled up since I sold them.
Yeah, so I'm thinking like back in those times from 2009 to 2012, where it was a bad time, a bad economy. Anybody can afford 900 to 975 rents. Okay. Up market, down market, sideways market. That's a bread and butter. That's a very safe, payment that somebody can afford a month.
And your mentor is still in the game with you? Do you guys do deals together?
Absolutely. Yeah, absolutely. Yeah.
I've never heard of this type of business model. This sounds amazing. I'm not gonna lie. No, let's find me one, if you don't mind. Find me one. I like to start slow. Find me 1 or 2. I would like to get into it.
Yeah, for sure. And let me just give you a visual too. Let me pull up my screen real quick so you can get a better. Can you see my screen, Monish?
Yes.
Okay. Can you see that?
Yep.
Okay. So this is a 4-slide thing I whipped up real quick. All right. All right. So here's the slow flip model. So you see the property on the left. These are real properties, by the way. These are real, purchased properties. So the property on the left, the value on that property was $100,000. The purchase price was $60,000. Again, there's no repairs. And this was a sweet deal.
But how do you know, Antonio, there's no repairs?
when I say no repairs, I mean like you, the buyer or the owner is not going to do no repair property. It needs repairs, but you're not going to do repairs.
Oh, the tenant will do repairs.
Absolutely, because they're going into this property as the ownership. They're working as ownership to the property.
That makes sense. That makes sense. Yeah, got it.
So it's like sweat equity per se. So no repairs to you. I got $1,000 a month I still own this property, by the way. I got $1,000 a month, or we're getting $1,000 a month. We got $3,000 upfront down, and with taxes and insurance you take out of that monthly, for me is it's around like 75 for taxes and 75 for insurance. That's 150 in my expense. Okay. So really, I'm netting $850 a month, if that makes sense.
Okay, sure.
On a $60,000 purchase, and really, I'm really 58.5. And so that $3,000 down payment, this is how the marketing team. I add that. This is how the marketing team gets paid. It's like four guys that this is how they make a living in my market.
Sure, of course, they manage them. They manage the.
Yeah. So they get half of whatever down payment they'll get for you. So $1,500 goes to them, and $1,500 goes to us in our pocket. So in this case, I'm really in it for $58.5. Once I got that, and I'm netting $850 a month on this. That's like a roughly 20% cash on cash return.
Okay.
Beautiful. So this is another one on Manley Street in Portsmouth, Virginia. 75K value, paid 45K for. I didn't do no work. I got $825 a month. I got $3,000 down. Taxes, insurance on this is $150.
Okay.
So I'm netting $675.
Okay.
Yep. These are just bread and butter deals. When these are like in my sleep.
Okay.
Yeah.
So what happens? I know that area, they got known for hurricanes and snow and this and that. What if the whole property is wiped down with some kind of tornado or whatever? Do you still gotta rebuild it, or this is the insurance's problem, or what's the tenant's problem?
This is the insurance. The insurance would be taking care of that.
And same goes if there's a fire or some kind of what if the tenant is the drug dealer? What if he's cooking meth in there?
My mentor has a story on that. He had somebody not cooking meth, but it was a weed house. They was using that for like to grow their weed, like the entire property.
Okay.
Yeah, so he got them out of there and cleaned up. They cleaned it up, and he just rinsed and repeat. I think he got $2,500 give or take down on that property, and just got another tenant buyer in there. Yeah. Okay.
And then I'm sure
that's like the one in them. I mean, that's just once in a lifetime story.
But that's nothing to worry about, right? Like, it's not like you're gonna lose the property because, or it's what do you call DEAs all over it, and they seize the property or whatnot. It's not like you can lose it, right?
No. I mean, the only way you lose it that I can think of is if just say you had a loan on the property and you didn't pay the bank back, or your lender foreclosed. I mean, that's the only thing I can think of. But far as like the insurance side of it, you're taken care of. Like, all my properties are insured, man. I get that. Before I close Munish, I have my insurance lined up. Like, I already told them about the address of the property. I don't want to go 3 days of no insurance. Like, some people do that, but I like to. That's just me.
No, absolutely. And I know if you buy them cash, you don't need insurance. You're not. It's not mandatory. Yeah, that's why I was asking. No, perfect. Yeah, no, please continue. I like to see more.
Yeah. All right. So you're only buying the slow flip model. You're only buying on acquisitions, meaning you're just buying it on the purchase price. 100K and under are the price points for me specifically. Like, I know it's like 14 of us specifically in my Virginia market that does this specific model. Okay. And it works. It works in a higher end and it works in a lower end. I do like the kind of the semi lower end because I like the higher returns, and I can get these things paid off quick, or get my money back quicker.
Got it.
So I like to pay 100K and under for price points.
Yeah.
Me personally. Again, the repairs is not your responsibility. It's the occupant or the tenant buyer that you put in there. Down payment is non-refundable, and again, it's 3K on average. The biggest down payment I got up to date was 10K, and I got 10K on a $60,000 purchase. So really, I was in it for, and I found that myself. FYI, that was one rare when I found the tenant buyer myself. So I didn't have to split that.
Okay.
That was a beautiful deal. Now, yeah, and I did a refi on that one too. So I paid cash for $60K, got $10K down. I was in it for $50, and then I refi at $80K, and it appraised at $128 something.
Got it. No, I've never heard of this business model. I mean, see, every day you learn something new. This is amazing.
Yeah, it's a beautiful model for me because I'm in a whole different state, man. And even if I was still local in Virginia, I don't, the type of personality that I have, I don't like those type of leaky toilet. I just.
Yeah, same here. I don't want to deal with it. I don't want
to deal with it, man.
And it brings you down, those type of things. So now nobody bothers you? Nobody bothers you?
No.
Nobody called you and said, hey, Antonio, you gave me a whatever shitty roof. You got to fix it. Nobody bothers you?
Man, no. You be so man, no. No. I'm not gonna say I never got a call from a tenant buyer, because I have got a call. That's very, very rare. But what we do, be like, hey, you go to your paperwork, Mr. and Mrs. such and such. Like, you see, it's so clear. It's so layman's terms that anybody can understand that you're responsible for the work.
So we're the bank, pretty much. If we get into that,
yep,
you or I will be the bank, whoever owns the property.
You hit the nail right. You are the bank.
Don't call me for fixer upper stuff. You got to do it, tenant, right?
All you are, and who the type of person that you're attracting a person that can't go to the bank to get traditional financing because their credit has some hiccups.
Oh, so that makes sense now. So these are the guys with really bad credit, kind of like selling a used car. They rip you off there.
Exactly.
So you're giving them an option to buy a home and keep a home. So you're helping them and helping yourself.
Exactly, and you'd be surprised. So many people that have some cash in the bank, they got $3K to put down, but just can't go to the bank to own a house, and they never thought they would ever own a house again until they saw this model on the marketing platforms.
No, perfect. No, that's great. Yeah, no, please continue. I'm loving what I'm seeing right now.
Yeah, and so you can still evict them like a tenant because of the type of paperwork. So the difference between a land contract and regular owner financing, the land contract, the deed stays in your name, Munish. However, they're working paid at 30 years, and once it's free and clear in 30 years off that, just go back to the 975 payment. That's when the deed gets transferred to them through closing.
Okay. Got it. And at that point, we don't need to do anything either. They will just work with the state or city and get it done.
Exactly. With the regular traditional owner financing, it's the same, but it's a slight difference. The day that they sign the paperwork, on day one, the deed gets transferred over to their name. That's the traditional owner financing route, and that's the route I don't like, because now if they default on their payment, instead of the model that we do with the land contract, I can evict them like a regular tenant. But if I did the traditional owner financing, where on day one the deed gets transferred to their name, I have to go through the whole foreclosure process if they default on the paper or on their monthly payments. On their monthly payments. And that takes a lot longer to get them out.
Got it. Okay. No, perfect. No, this is I'd love to get in on, if you see something good and that you might think I like, let's just I'd like to work with you.
Yeah. So here's the last slide here. So here's some more benefits. You can do this in an already proven market, which is my Virginia market. I've been buying and flipping that market since 2009, man. The average down payment is $3,000. Ironically, I have one that they're signing on Sunday. I'm getting $2,500 down. So that's, sometimes you may get a little less than $3,000, and sometimes you get $4,000. So on the average, it's $3,000.
So this is the down payment, essentially a down payment.
Yes.
Right? Like a 10%, 20%. No, what is that? 60K. It's a 5% down payment.
Give or take. Yeah. Give or take.
Okay. Got it.
The marketing team in that market, their role is to occupy the property. They're not managing the property for you. They're just occupying the property for you to get it fulfilled with a tenant buyer. And then if it wants to take them again, as far as the previous tenant buyer defaulting, they'll rinse and repeat and reoccupy the property, get another, down payment, whatnot. In return, they collect half, because this is what they do. They'll take pictures, they do videos, they put lockbox on the property. They'll show the property 5, 6, 7, or 10 times until they have an interested tenant buyer. They get the paperwork ready. They'll send you the paperwork. You will overview it and say, hey, it's good. My name is spelled correctly. The numbers look good. Okay, and then they'll meet the tenant buyer at the office in Virginia Beach, get it signed for you, and then they'll send you a copy along with, and they'll send you your half of the $3,000 in this case via Venmo or whatever. So they'll
send you a deed, right? At that point.
What's that?
And they'll send you a deed, I'm sure, at that point, once they file with the state and all that.
Yeah. Well, no, they don't file anything with the state. You close now before they even market the property. You close with the title company in Virginia.
Oh, so I already have the deed. Okay.
Absolutely. Yes.
Okay.
Yeah. They don't do the marketing, or they don't have a tenant buyer ready to sign until the day you close on it through the title company.
Got it. So they're doing the marketing. They're making sure all the paperwork is correct, and then okay.
Perfect. And in return, once they find a tenant buyer with whatever down payment, $3,000, they keep half of that.
Okay.
Yeah, I'm okay with that, man. Me personally, I'm always saying, okay, how much can you get me a month? So if you get me, I paid $70,000 for this property, and you get me $850. Man, that's a good return.
Yeah, I agree. I know that's that. I mean, if they're charging me $1,500 out of that, I got no problem with that either. None whatsoever.
Here's another thing. Again, I'm in another state like you. This is a Virginia market. I have a representative. Her name is Stacy. That represents this. Now, this is worst case scenario stuff. I like to always be upfront and be worst case scenario. If just in case your tenant buyer defaults, right? Now have an eviction. I have a representative. Her name is Stacy. And if you see that B, the B right here that says I pay her $100, she actually doubled her price in like 4 months ago. So now she's $200. So from now on, I used to pay her $100 to represent me in court, but now it's $200 whenever I have a new eviction. So basically, I'll pay her $200. She files the eviction paper. She goes to court on eviction day while I'm here in California or Florida, whatever. I don't have to fly there, and she represents you in court, and you get the tenants evicted, or tenant buyer evicted out of your property.
Okay. And then once that happens, do you have a team that can also put that back on the find a new buyer?
Yep. So that goes back. Once she gets them out, that goes back to the marketing team. So they all know each other. I have a streamlined operation there. So now the marketing team sees that it's eviction. Now they're going to remarket it, get a new tenant buyer, a new $3,000 down. It's a rinse and repeat factor after that.
Got it. So they make money. They want to do that because they can get that $1,500, and then everybody keeps happy and keep moving on.
So in this case, for the eviction, this is why I like this model. So just say you got 3 months of, let's just say $800, right? Just say you're getting $800 from a tenant buyer. Just say if it was vacant for 3 months.
Okay.
Not vacant. I'm sorry. You wasn't getting that $800 for 3 months because they wasn't paying you.
Yeah.
Within that 3 months is an eviction, so that's basically $2,400. So now you got to pay $200 to Stacy, the eviction representative, plus $70 for the eviction doc. So that's $270. But once you get them out, you're getting another down payment now refundable for a new tenant buyer. Now you basically kind of recoup most of your money.
Yeah, so you break even right from the get-go. Okay.
That's why I loved it. It's one of many reasons why I love this. Yeah, you just basically getting your money back.
Got it. No, I like it. So our market, so in this business model, your market is people who can't get traditional loan.
Exactly.
Got it. So there's okay, perfect. No, this is great, man. I'm really interested. I'm not gonna lie.
Yeah, no, it's like I deal with a lot of professional athletes, and I have they either fund me on some deals, or they're buying properties now from our Virginia market, because as a lender, like you can lend me money, if you up for it, and you could be a lender and fund me a $70,000 deal, and I'll pay you a return. You just the bank, I'm paying you monthly payments on that loan. But on my closing day, right, my lenders were seeing what I was paying, my numbers for my property, and then they start seeing the HUD, the settlement statement, because as a lender, you still get to, see the settlement statement. I'm like, dude, like I'm looking for properties myself. Like, find me a deal like this instead of me the money. So that was the case for that.
Got it. So are you looking for investors, or you're looking for, like, you're willing to have me just buy, just buy on my own, and and I'll give you some kind of fee for your time, or like, what are you looking for? Like, are you looking for investors?
I'm always looking for investors, man. But if you want your own real estate piece, and I'm game for it, man. I mean, either way, it's a win-win. My market is I'm not gonna say it's the best kept secret because it's not. People know about Virginia market. It's just I'm blessed to know that market.
Yeah.
And be aware, because it's a lot of markets don't have these type of numbers.
Yeah. No, show me both numbers as an investor and as an owner. I like to get into both. Little bit with you, a little bit on my own. Because I don't know the market. If you help me, I'll do it on my own. So I'm willing to do a little bit of both. So I can say, okay, this is my portfolio, and I'm an investor on this side. I'm own this. So if you're up for that, I like to dive in.
Yeah, so with I call it private lender is basically just like my mom, my grandma that has a 401k, or just cash sitting in the bank. It'd be a pro athlete, it'd be my neighbor. Just have money sitting in the bank. They just collecting less than 1% at Bank of America, or just say a bond or something that's not getting returned. I basically at least double, if not triple, what they're getting. So if it's getting 1%, I'll pay them 6, 7, or 8, as high as 8%, depending on the deal. Annual return on their money. They're not doing anything. They're just literally just the funding partner in this deal. Yeah. And I pay them monthly. So the monthly dividend that I pay them on their money. So just say a CD, a bank CD. A CD is 1%. I pay them 6%. It's just 6x their money. Just by putting a new vehicle with me. And what I like about on the funding side, on the lending side, how your money is what's the word I'm looking for? Protected. If the house blows up, you're still protected as a lender because you get lender's insurance. You're added to my insurance as my property insurance as a lender. Also on closing day, on the settlement statement, you get lender's title insurance. So just in case I try to sell it later on and a title issue pop up because the title company missed something, you're protected on that end. And if I don't pay you back, the bank, Mr. Moniz, get to take my house back, my investment back, because you get a deed of something called a deed of trust. The exact same thing is where if you go to Bank of America to get a loan, you're signing like 100,000 documents, which is a lot of jibber jabber, but within those 100 documents, there's a deed of trust that you're signing, meaning that they can take the house back from you if you default.
No, absolutely. I like to explore both angles. I like to investor angle and the owner angle. So since you showed me that, I want to go through you. I want to make sure we do it together. I want to like to be investor, and also if I can own some, just so I have my own portfolio, pass it on to my kids, and that would be great.
Yeah, for sure. What do you? Let me ask. What do you? What do you want to like? How much you want to start with, like, far as on the buying side, and how much?
So
being conservative.
I mean, honestly, like few $100K is that's a good start for me. But in that, if I can own couple and then have as an investor in couple, that would be ideal situation.
Okay, gotcha. Yeah, I mean, you're gonna love the slow flip, man. I mean, it's.
Yeah, since I'm starting out, I think I know it's not a crazy amount, but something that I feel comfortable with and learn as I go, and then keep as I see the money come in, I can keep reinvesting that.
For sure. Okay, so what I want to do, I'm going to look at. I'll call a few agents and see what off market, because in my market, I kind of got a household name in the Virginia market. I've been doing it for a long time, and I like to get the deals before they hit the market.
Yeah. Absolutely. No, please let me know. Please keep me in mind. I would love to. I've never heard of anything like this. I'm not gonna lie. I mean, I'm sure some people already done it or whatever. Like you said. I've never seen it. I've seen in commercial they have a land deal. Like you own the land. They build the companies come in, like Starbucks will come in and build their own store.
Yeah.
And then after 20 years, you own the whole thing. and they either renew the lease or they can leave.
Wow.
I don't like that model because if they leave, I don't know who else I can rent it out to. That might just sit there for who knows how long, even though that might be paid off by then, but it's not making any money, right? You're just it's an empty shell at that point.
That's great.
I'm like, I don't want to put in $2 million, even if I take a loan and then after 15 years it's paid off. But what am I going to do with it?
For sure. That's crazy. Wow. Yeah.
That's not happening due to commercial, unless I'm missing something. That's a great model too. If you can lease it out again or renew with Starbucks or get like Burger King or somebody in there. But I just don't know how to do that, you know? So that's why I'm like, maybe start out small. I love real estate. I like the whole, you know, cash flow system, but I was just not ready to put money in commercial at that point.
Wow. Right. Yeah. I think this is the year. I don't know, right this second, as far as, you know, we're in January, top of the year, but sometime maybe the end or sometime this year is going to be the play to buy some commercial stuff because of all of the people that are defaulting right now that we can't see, that's not even on the market yet. I think this is the calm before the storm in the commercial room.
So you think commercial will crack big time?
Absolutely, especially in the hotel. Some businesses like strip malls. Like I was in Beverly Hills last night at Chipotle, and I just counted just on that little Beverly Street, that little strip there. I probably counted 5 boarded up businesses, small businesses, and that's scary.
Yeah, you might be right. You might be 100% because all the PPP loans. That's another 2 months now.
Yeah.
And that's not gonna help anybody.
No.
That's not gonna. I mean, yeah, it's a mom and pop shop. Yeah, you can buy 2 months, but you're already in debt by now because in 1 year your sale went down 90%. So there's no way you're recouping that.
Yeah. It's kind of scary for a lot of small businesses, but you know, you got a few guys, you know, like yourself, like you have some cash and you don't seem financially strapped, you know, where you can do investments in this time. So this year and especially next year, it's going to be a kid in the candy store for a few investors that can really get some great deals.
Okay. No, and keep me in mind. You know, like I said, I like to. I'm a slow runner, but I like to, you know, get there. I like to get to the destination, and I don't. That's why, you know, even my stock market investments, no matter what, I invest every week. I don't wait till I get paid or 6 months. I keep investing money. You know, even if it goes down, I buy more. If it's going up, I pull my investments back. But instead of 1,000, I might do 500 that week. But no matter what, I don't stop the investment. I believe in, you know, I'm like a long-term player. I just want to make sure the investments are safe, and as long as the money's coming in, I keep reinvesting. You know, I'm just building, you know, towards my 50. I want to make sure that next 12 years I have to get to 50. I make sure I have enough cash flow coming in, and you know, that's the plan. That's the plan.
Are you like a day trader on the stock side, on the day trader side?
No, I don't do day trading at all because you don't make any money. I buy ETFs. I buy, like, for example, right now I got a lot of cash into all these airlines and hotels and casinos. Their stocks, they all cracked big time. They came down 80-90%. And yeah, so airlines like Southwest and JetBlue, and they were all big time came down. And unfortunately, I bought them in August, September. I wish I bought them in April. And you know, now they're going up and they pay dividends. And I don't buy any stocks that doesn't pay dividends. That's why I like this market, cash flow. You know, even the stock's going down, I still want some income coming in. And I don't panic if it's going down. I'm like, shoot, buy more. Who cares?
Yeah. Yeah, so that's something I feel like I missed the boat on, especially in this past, since, you know, beginning of COVID. I missed the boat on stocks. I've seen many guys that really came up just in this less than this year. And
it just started to go up, so you haven't missed anything. You haven't. Well, they're still 50-60% down, so there's a huge upside on those. But again, don't put too much money in. I started off at like 100K, and every week I was putting $10,000-$15,000 in every week. Because, you know, some weeks they go up, some, you know, because I don't want to just put all the money in one shot and just then I'm like, holy shit, it went down.
Yeah.
So I'm playing, when it goes down, I put in extra few grand. And when it goes up, I'm like, okay, let's just stick to your few $1,000.
Wow.
So and I'm not selling them. I'm just right now I'm just buying.
That's good. That's good.
Yeah, and they all pay dividends. Some pay 2%, some pay 5%, some pay 7%. So some cash flow coming in.
What are you using to invest in? So what platform are you using to invest in?
Right now I'm using SoFi.
SoFi? Okay. Yeah. SoFi?
Yeah, SoFi and E-Trade.
SoFi?
Yeah, SoFi, yeah.
Okay. Is that like an app on like on a smartphone or?
Oh, yeah, you can do an app. Dude, they're a great company. Amazing company.
Gotcha. I was told to use what do you think about?
You can even take loans from them. You can even take you can renew your college loans if you have. You can borrow money. You can check your credit. You can there's a bank account. What else? You can borrow money as personal loan. Buying a car, whatever. Up to 100K. So they're a legit company.
Wow.
Yeah, even SoFi Stadium. I think in LA. I don't know which team they own the SoFi Stadium. You can check it out.
Oh, okay.
I think it's the Rams or it's the I don't know which one, but check it out. They're doing amazing right now.
What do you think about Robinhood, that platform?
I've heard good stuff, but I like SoFi because you can add a recurring investment, but with the click of a button. You don't need to go in every week. You don't need to change anything. I just say, okay, buy American Airlines, $1,000 a week. Just do it. So wow. It automatically keeps doing it. I don't need to go in and decide how many shares I want to buy. And there's no transaction fee. So if you buy stocks, they charge you $10 or something. And when you sell, they charge you 10. SoFi has no fee. As long as you keep your investment a certain amount, I think 10,000 or so.
Yeah.
They don't charge you any fee. So you can buy as much as you want. You can sell as much as you want. No fee.
I love it. Yeah, you got me sold on that. So with the stocks, do you do the option side of it, or you just actually buy the shares?
Buy the shares. I'm all about just companies and that, and I always buy companies that I follow. I love like GMC, and I don't buy Tesla because A, it's too expensive. B, I don't know anything about technology like that. To make the batteries, I don't understand it. I buy companies that I follow, and I use like Coca-Cola, AT&T, like long-term companies where you're not gonna lose your pants. You just maybe they'll go up and down. But I'm building for my retirement. I'm building for next 20 years, 15 years.
Smart.
Yeah. And then just in dividends, you'll recover your money because some of these companies pay 7-8% dividends. So wow. A $100,000 investment, you get $7,000-8,000 a year without lifting a finger. And they might still go up. So you potentially double, triple your money if they go up.
That's crazy.
If they don't, but you still got $7,000 from them, and you can use to buy more, the same company, or you can use to by other companies.
That's beautiful. I'm going to look into this today, man.
Yeah, no, we got the same mindset. We want cash flow. So no, please just keep me in mind if you see anything. And like I said, I'd love to get started. And hopefully make an investment soon.
Awesome, man. I definitely love it, brother.